Right now, a massive silver setup is forming, and most people will completely miss it. While the majority of investors remain focused on stocks, cryptocurrencies, and the latest financial headlines, something extremely significant is taking place in the silver market that could deliver life-changing returns to those who understand what is happening. The fundamentals have shifted in a way that is no longer deniable. Demand is exploding while supply is shrinking, and the decades-long suppression by large banks is beginning to crack under its own weight. If you have ever felt that the financial system is rigged against the average person, then you are about to see clear evidence that your instincts have been correct all along. The smart money is already positioning itself, and the window to get in at these prices is closing faster than most realize. The truth is that silver has been undervalued for years, and the gold to silver ratio proves it beyond any doubt. Historically, this ratio has averaged around 40 to 1, but today it still sits above 85 to 1. This imbalance is not natural. It is the direct result of deliberate manipulation through paper futures contracts that do not reflect the real physical market. The banks have been selling silver they do not actually own in order to keep the price artificially low so that industrial users can continue buying it cheaply. That game is now coming to an end. Industrial demand for silver is growing at a pace never seen before while new mine supply continues to fall. We are heading into a structural deficit that cannot be ignored any longer. Last year alone, the market faced a shortfall of 176 million ounces, and this year, the deficit is expected to grow even larger. These are not guesses. These are numbers coming from some of the most respected analysts in the industry. Think about where silver is actually used in the modern world. Every solar panel requires a significant amount of silver to convert sunlight into electricity. With governments around the world pushing aggressive green energy targets, the demand from the solar sector alone is set to explode over the next decade. Electric vehicles also rely heavily on silver because of its superior conductivity. Each electric car uses almost twice as much silver as a traditional gasoline vehicle. When you combine that with the massive build-out of 5G networks, artificial intelligence data centers, medical equipment, and electronics, the total industrial consumption of silver is forecasted to reach over 1.2 billion ounces this year. At the same time, global silver mine production has been declining for several years. Many of the largest silver mines are aging and grades are falling. New discoveries are rare, and bringing a new mine into production can take 10 to 15 years. This creates a situation where demand is surging while supply is contracting. That is the classic setup for a major price move. The banks that have been shorting silver futures are now finding themselves in a dangerous position. The amount of paper claims against each physical ounce sitting in COMEX vaults has reached extreme levels. Registered silver inventories have fallen to multi-year lows, and the trend is continuing downward. When industrial buyers finally realize they cannot rely on the paper market and begin demanding physical delivery, the squeeze will be violent. We have seen small versions of this before, but nothing on the scale that is now possible. In 2011, silver moved from $10 per ounce to nearly $50 in less than a year. Many analysts believe the next leg up could be even more dramatic because the fundamental imbalances are far greater today than they were back then. The Hunt brothers tried to corner the silver market decades ago, but today the real corner is being created by genuine industrial need, combined with years of underinvestment in new supply. Central banks around the world have been aggressively buying gold for several years now. Countries like China, India, Russia, and Turkey have been adding hundreds of tons to their reserves. This is not random. These nations understand that the current fiat monetary system is built on debt and endless money printing. They are preparing for a world where trust in the US dollar slowly erodes. While they buy gold, they have largely ignored silver, but that is beginning to change. Silver remains the forgotten monetary metal, even though historically it has served as money alongside gold for thousands of years. When the general public finally wakes up to the coming monetary reset, many will turn to both gold and silver. Because silver is so much cheaper per ounce, it becomes the natural choice for the average person who wants to protect their wealth. This creates the potential for an explosive catch-up move that could see silver outperform gold significantly in the coming years. If you have been stacking silver already, then you are positioned on the right side of this trade. You have likely felt for some time that the system is broken and that real assets are the only true protection against inflation and currency devaluation. The constant money printing by the Federal Reserve and other central banks has destroyed the purchasing power of the dollar over decades. What used to cost a few cents now costs dollars. What used to cost dollars now costs hundreds. This trend is not stopping. In fact, it is accelerating. Every new crisis is met with more stimulus, more debt, and more currency creation. Silver and gold have always served as the ultimate hedge against this kind of monetary mismanagement. The difference this time is that silver also has massive industrial tailwinds that gold does not possess. This dual role as both a monetary metal and an industrial metal gives silver unique leverage in the coming years. Many people will tell you to wait for a better entry point. They will say that silver could still drop lower before it moves higher. While it is true that prices can always pull back in the short term, the overall setup has never been stronger. The risk of waiting is far greater than the risk of buying now. Once silver breaks above $32 and holds that level, the momentum traders and hedge funds will pour in. The move will feed on itself as short sellers are forced to cover their positions. We have already seen early signs of this happening in the options market and in the rising premium for physical silver products. Coins and bars are becoming harder to find at reasonable prices, and delivery times from refiners have stretched out. These are the early warning signs that the physical market is tightening. The mainstream financial media continues to ignore this story because it does not fit their preferred narrative. They want you to stay invested in stocks and bonds that benefit the large institutions. They want you dependent on a system that enriches the few at the expense of the many. That is why you will rarely hear any serious discussion about silver on the major networks. They focus on the daily fluctuations and ignore the much larger multi-year trend that is now turning in silver's favor. This is exactly why so many people will miss the move. They take their cues from television anchors and financial advisors who have never owned a single ounce of physical metal in their lives. They trust the very institutions that have the most to lose if silver breaks out to the upside. For those who have been paying attention, the signs have been clear for some time. The silver market has been sending signals through both price action and the behavior of large traders. Open interest in futures contracts remains elevated, while deliverable silver in the vaults continues to decline. This mismatch cannot last forever. At some point, the physical market will assert itself, and the price will have to adjust dramatically higher to balance supply and demand. When that happens, the people who accumulated early will be rewarded, while those who waited for confirmation will end up chasing the price higher. This pattern has repeated throughout history in many different commodities. The early movers win. The latecomers pay the highest prices. Geopolitical risks also add another layer of urgency to the silver story. Trade tensions between major economies continue to simmer. Supply chains remain vulnerable to disruption. Any serious conflict or embargo could immediately impact the flow of silver from mining regions to industrial consumers. Countries that control significant silver production could decide to restrict exports in order to keep the metal for their own strategic needs. This kind of event would act as a catalyst that accelerates the entire setup. When you combine geopolitical uncertainty with the already tight physical market, the potential for a rapid price spike becomes very real. Smart investors understand that insurance against these kinds of black swan events is worth paying for, and physical silver remains one of the most accessible forms of that insurance. The debt situation in the United States and other Western nations has reached levels that were once considered impossible. The national debt continues to climb, with no realistic plan to bring it under control. Interest payments on that debt are now larger than many major budget items. At some point, the only way out is through inflation or currency devaluation. Both of these outcomes are extremely bullish for precious metals. Silver in particular stands to benefit because it is more affordable and has higher volatility than gold. When money flows into the precious metals sector, it often moves into silver in even greater proportion during the later stages of a bull market. This creates the potential for asymmetric returns that many investors are still not prepared for. If you own a home or have a retirement account, you should seriously consider what a major currency devaluation would do to your savings. The dollars you hold today will not buy the same amount of goods and services in the future. Real assets that cannot be printed are the only logical protection. Silver has served this role for thousands of years across many different civilizations. It is portable, divisible, recognizable, and has intrinsic value due to both its monetary history and its industrial applications. Unlike paper assets, it cannot go to zero. Even in the worst-case scenario, it will still hold value because of its many uses in technology and medicine. The current setup in silver is not just another trading opportunity. It represents a fundamental shift in the relationship between paper markets and physical reality. For too long, the paper price has dictated what the physical metal is worth. That relationship is now reversing. Physical buyers are beginning to set the tone, and the paper market will eventually have to follow. When this reversal gains momentum, the price discovery process will become disorderly. We could see limit-up days in the futures market as short sellers scramble to cover. These kinds of moves create fear and excitement at the same time. The key is to already be positioned before the chaos begins. Many stackers report feeling a sense of calm once they begin accumulating physical metal. There is something psychologically powerful about holding something real in your hands instead of digital entries in a brokerage account. Silver gives you that tangible connection to wealth that fiat currency can never provide. Every ounce you own is a small act of independence from a system that demands your constant participation and obedience. This is why so many people in our community continue to add to their positions, even during quiet periods in the market. They understand that the real move is still ahead, and they refuse to be caught unprepared when it arrives. Looking ahead, the next several years appear incredibly bullish for silver. The combination of growing industrial demand, constrained supply, massive government debt, and rising geopolitical tensions creates a perfect storm. Add to that the potential for monetary reform or a new global financial architecture, and the case becomes even stronger. Silver will likely play a significant role in whatever new system eventually emerges. Those who accumulate during this quiet accumulation phase will be well rewarded as awareness grows and prices adjust to reflect the new reality. The most important thing you can do right now is to continue your education and stay disciplined. Do not get shaken out by short-term price movements or negative headlines. The fundamentals are what matter over the long term, and those fundamentals have rarely looked better. Keep adding to your stack when prices allow. Focus on acquiring physical metal that you can hold and control yourself. Avoid excessive leverage and complicated financial products that ultimately benefit the banks. Simplicity and patience remain the most effective strategy in this environment. In conclusion, the silver setup is happening right now. The pieces are falling into place, and the evidence is becoming impossible to ignore. Most people will miss it because they are distracted or because they trust the wrong sources of information. You now have the opportunity to position yourself ahead of the crowd. The coming years could see silver deliver returns that reward patient stackers handsomely. The choice is yours. The setup is live. The only question that remains is whether you will be one of the few who sees it in time or one of the many who looks back later with regret. The data is clear. The trends are in motion. Silver is preparing for its next major chapter, and that chapter is likely to be one of the most profitable in its long history. The banks know what is coming. The industrial users know what is coming. The smart money knows what is coming. Now you know what is coming too. The silver setup is no longer a theory. It is rapidly becoming reality. Protect your wealth, secure your future, and whatever you do, do not be one of the people who misses this move.